So savings can run out very quickly, whereas an income protection plan could be paying you out for 10, 15, 20 years. So when you work it out financially, what it would be paying you, often it's over £1 million that the insurers backed you for. Do you see what I mean? It would take a lifetime to save that sort of money, and you can't guarantee it.
This episode is sponsored by Saxo Markets. Welcome to the Investing Insiders podcast, where we help you achieve financial well-being by making smarter money decisions. I'm Brianne.
And I'm Antonia.
And in this episode, we'll be digging into the world of income protection and whether it could help you if anything unexpected happens to your ability to earn. Joining us today is Michelle Grant, a senior advisor and protection specialist at Mortgage Scout. Michelle, welcome to the show. It's a pleasure to have you. Before we kind of dig into things, it'll be great to get your expert overview of what income protection is. What do policies tend to cover, and what might not be covered as standard?
Yeah, so quite simply, income protection is a personal or private sick pay. So instead of relying on your employer, which, they might support you for a month or 2 months or even 6 months on full pay, once that finishes, rather than the rug be pulled from under you, the insurer then comes to the rescue and actually starts paying you a monthly income, a guaranteed monthly income. It's dependent on you being signed off work by your GP, and it could be things like backache, mental health. It doesn't always have to be a life-threatening illness that keeps you off work long term, but it just provides a financial buffer and security for you and your family.
Amazing. And who should consider income protection? Who might benefit from thinking about taking out a policy?
Anybody who's working, really. You've got to be working for at least 16 hours, ideally, to be able to have income protection, even though there is a little bit of innovation in the market. So there are some insurers that recognise that someone who's a homemaker also, is actually providing value and should be financially rewarded if they're unable to work, unable to look after the children in the house. So, yeah, but normally it's if you're working.
That's a really good point about people who aren't working, because, I've actually been in this position myself because I took some time out of work when the children were little, and then I broke my back. And when you're in a household where you are relying on a single income, then that sort of thing can have quite a catastrophic effect, because at that point, that income comes under pressure because that person has to take time out of work to come into the house to look after the children and do all of that sort of thing. And at that time, we didn't have income protection. So we very much wish that we had.
Definitely. It wasn't as widely spoken about. It's become more to the fore since the pandemic, because the government had a backed scheme called the furlough scheme. So people were paid to stay at home. So that was a government-backed income protection, as it were.
Right. Okay. Yes. Yeah. That's a very good point.
I guess it's quite interesting because it is kind of becoming a bit more popular and more widely spoken about now. What kind of challenges are you seeing with people who might be trying to get a policy but are a bit unsure about whether or not it's right for them?
So people can't imagine themselves getting ill. This is what the main challenge. We're all optimistic and we all step into the new year, expecting big things, and no one can foresee that accident that unfortunately can happen. So it's keeping people aware of the risks that are out there, and especially when you take out a commitment like a mortgage, which is, 20, 25 years, 30 years. People are taking mortgages to the age of 70 and 80 now, believe it or not. So it's actually having that long-term view rather than just seeing what's in front of you all the time and just thinking about day to day. It's actually putting a plan in place that underpins all of your goals and, your hopes and your dreams, basically.
Do you see a sort of a pattern in when people tend to take income protection out? Like, at what stage of life are they usually?
Well, you can take income protection out at any stage, as long as you're a working adult, but people tend not to come in contact with a financial advisor unless they're going for a mortgage or they're going to sort out their pension. Do you see what I mean? So the good thing is websites like Compare the Market and Money Supermarket, anyone can jump on there and get themselves quotes for life cover, critical illness, but income protection is a little bit more tricky because it's got a lot more moving parts. It's more tailored to your health, your lifestyle, the benefits that you get at work. You see what I mean? So it's a bit trickier to actually get yourself a quote. It needs some form of advice, and not everybody's got a financial advisor within their network of friends.
Yeah. So is that the process usually that people would go through, is that you would go to your financial advisor and sort of take out income protection that way? Or do people just approach you directly and they can go through the process of tailoring it to their specific needs?
So at the moment, I'm actually working for a mortgage brokers. So the people that I tend to speak to are people that are first time buyers or remortgaging. So they realize that they're taking out a big financial commitment and, under Consumer Duty, which is like a new rule that's come in for the Financial Conduct Authority, which means that advisors now have a obligation to actually speak to clients more, not just about the mortgage, but also about how to make sure that anything unforeseen that could happen is actually protected. Do you see what I mean? So the debt is underpinned by some form of insurance to fall back on.
Yeah, I guess with the cost of living crisis that we're in at the moment, and the fact that people are stretching so far to take a mortgage out, kind of is a bit of a double-edged sword, because it means that the income protection is even more vital.
Yeah.
But could possibly to some people feel like an extra expense that they can't quite stretch to. Are you seeing these kind of responses?
Yeah. So, I mean, generally, if someone takes out a mortgage, they've got to make 300 payments over the term of that mortgage. And your best will in the world, an employer might cover you for 1 month, 2 months, or 6 months, but you still got that big shortfall of 294 months where you've got to find that monthly payment regardless. So if people do take a long-term view, then having something to back you up right up until retirement age would work better. Having a guaranteed income where the insurer comes to the rescue and takes over from your employer and guarantees you a wage. So when you look at sacrificing 2% of your salary for a guaranteed income right up until retirement, because a lot of these income protection policies, once you fall ill and some people can't go back to work, the insurer's paying out for like 20, 30 years. Do you see what I mean? So it's one of the most valuable insurances you can possibly have, because between now and retirement age, you would be bringing into your household, £1 million to £2 million. You're your best asset. Do you see what I mean? So your ability to earn really should be protected.
And without that protection in place, and in the instance of someone with a mortgage, what would happen?
Well, the government do have a statutory sick pay, which is £118.75, and they pay that on a weekly basis for up to 28 weeks. But for most people, that wouldn't cover even their shopping bill for, food and getting about. So the only other alternative is to take out some form of debt, like high interest credit cards, to get you over that bridge, or become a financial burden to your family. Most UK households haven't got access to savings beyond 3 months, unfortunately. The FCA did a report, Financial Lives report, in 2024, and the state of savings is quite tough. Like you said, everybody's pushed. So without an insurance, really, you end up losing your home because the bank always wins. They'll get their money. Do you see what I mean?
Yeah, so that's what I'm wondering is, are people sort of staring down the barrel of losing the home? And okay, so we actually do see this happening. Oh, God, that'd be so awful. I mean, just have the illness or, being unable to work and then having to lose your home at the same time. It just really sort of hammers home how important this kind of protection is for people.
Definitely.
Yeah, it's such a big thing to consider. And for people who might be still on their journey to purchasing a property and maybe renting right now, is income protection something that's available to them and something they should consider?
Most definitely. Yeah. So like I said, people do jump on to Compare the Market and Money Supermarket. Oftentimes when they grow in their family. So, having a child sometimes prompts people to look for life cover, but then they would speak to an advisor and realize that not just in the event of death, but also in the event of becoming ill, your family need cover. So sometimes life events like getting married, having children, moving, renting would actually prompt you to think, well, actually, I need to now make sure that my income is guaranteed beyond the 3 months what my employer will give me if I'm off work sick.
So in terms of the cost of it, do you see a wild varying sort of costing depending on who you take the cover out with? Or is this one of these sort of things where there's a sort of standard price? Should people be really spending a lot of time shopping around?
It's more, if you go to an advisor, they tailor it to your budget, because with income protection, there's a lot of moving parts. So if you're older, like, someone over the age of 40 or 50, they're more likely to be using a sickness policy between now and retirement than someone who's younger, who's young, fit and healthy. So you can see the price really goes up quite a lot the older that you are, and also lifestyle factors. So if your BMI, height and weight ratio is over 25, your actual risk of becoming ill is significantly higher. So you'll see critical illness policies and income protection policies are more expensive. Also, if you had pre-existing medical conditions like anxiety, stress, mental health, and also backache, musculoskeletal, those kind of conditions, if you have suffered them in the past, then actually getting them covered under an income protection policy would require you to be symptom-free for at least a couple of years before they'll look to cover that side of your health.
And just on that, tell me, if somebody is in a position where they're older or they have skeletals or muscular issues historically, are they looking at much higher premiums? Is there a point at which it just becomes unaffordable?
So what normally happens is the insurer will send one of their nurses out to do blood tests and scans and things, or they will actually go to your GP for a report before agreeing a premium. So it's underwritten by the insurer and the price will be reflected what the insurer sees as their level of risk. So if they think they're more likely to be paying out, sometimes it will be reflected in the price. But that's where the value of having an advisor comes in, because we would then shop around, would have a relationship with the different insurers and be able to get you the best price based on your personal circumstances.
I see. Okay. So it's like an independent financial advisor who can sort of just go and look at all the different products and find the best product for you.
Yeah, and also your occupation can be high risk. So a lot of manual workers, they're more likely to be able to have accidents, like a roofer or an electrician, or depending on the kind of job that you do, that can actually have an impact on the price. So there's so many different factors that come into it. I couldn't just say, oh, Antonio, it's going to be 20 quid. Do you know what I mean? I need to actually speak to you and really understand. There is an American firm called MetLife that do an insurance that isn't medically underwritten. So it just gives you like a blanket cover for accident. If you break a bone, if you go into hospital, and you can choose whether you pay £11 a month or £20 a month. But, what it covers you for is very restrictive. Whereas in income protection, it's if the doctor signs you off work and says you're unfit, the insurer will need to pay out. Do you see what I mean? So it's a lot more flexible.
And does it correspond with health cover at all? So if you had, say, you were covered by Bupa or something like that, how do they work in conjunction with each other, if at all?
So private medical insurance is helping you in jumping the NHS waiting lists, the queues, and also you've got access to the top surgeons, and your surgery gets paid for. If you've got an income protection policy, all that is actually doing is maintaining your lifestyle and paying your bills, keeping up with your commitment.
So Would the price of your income protection policy reflect the fact that you had private health insurance?
Not necessarily, no. They
Okay.
tend to treat them separate. One of the insurers, Vitality, they do have their private medical insurance, which does complement if you've got an income protection policy with them as well. Because
Okay.
they have things like 12-week cancer support and things like that. So they do complement each other.
Yeah. I mean, because, this is what I'm wondering, because when you've got private health insurance, the fact that you skip all the queues should theoretically mean that you are likely to get better quicker. But I mean, obviously, that's a huge generalization. But that's why I was sort of thinking, oh, well, could you sort of use them together to try and reduce your costs a little bit?
Yeah. And definitely with the rehabilitation as well, because a lot of income protection policies have things like 24/7 GP consultations, second medical opinions. They give you physio, they give you, like, in your pocket, you've got a clinic, so you can access like counselling treatment as well. So
Right.
they can complement each other.
How does it differ from a critical illness cover?
Yeah. So critical illness provides you a lump sum. So sometimes critical illness can be very expensive. We're living longer, which is a great news story, but unfortunately, we're more likely to get illnesses like cancer, heart attack, stroke between now and the age of 68, which is what I mean. So the chances of getting a serious illness, unfortunately, in this country are higher than people imagine. Cancer is one of the highest reasons why people claim, and people use that one-off lump sum normally to pay for surgery or make changes in their house. They don't always use a critical illness policy to pay off a mortgage. Do you see what I mean? And oftentimes, because of the expense, when I give people advice, I get them to cover 1 or 2 years worth of salary, because it's a lump sum that gives you more flexibility than just keeping up with your monthly bills.
Yeah, that makes sense.
I'm just wondering if you have any statistics to share with us, the amount of people who have critical illness cover who then go on to make a claim or anything like that.
So each insurer, yes, every year they publish their claims data. So yeah, each insurer, if you go onto their website, you will actually see the volume of claims, life cover versus income protection versus critical illness. But you're more likely to claim on an income protection policy because of the flexibility of it. So it's if the doctor signed you off work sick, whereas with a critical illness, your illness has to meet a certain severity and it has to meet the list of definitions on the insurer's actual specifications. So it's a lot harder to get a critical illness payout. You have to wait for a diagnosis of cancer or heart attack, or it has to be a serious illness for them to pay. Do you see what I mean? Whereas income protection, it can be, the doctor signed you off with backache and you're off work for 18 months, but as long as the doctor's agreed that you're not well enough, you're going to get your payout.
So is there a way that these policies can work in conjunction with each other, or do you have to choose one over the other?
No, it's to do with your affordability. And oftentimes, because I've got the expertise to be able to mix and match, I do menu plans. So even, young families can have a bit of mortgage protection, a bit of critical illness, a bit of income protection. And there's one that we haven't talked about called family income benefit. And it's a low cost form of life cover, which, I normally do for parents, to make sure that there's money there for the children as they're growing up.
And as you're kind of talking to clients and working out what might be best for them, how do you work out how people can make sure that they've got the right level of cover so they're not underinsuring themselves or overinsuring themselves? What does that process look like?
Yeah, so it's all based around their income and their outgoings and their budget planner. So I would do an interview, which, they class as a fact find, and I would get an understanding of their job, of their pay, of how they spend their money, where the money goes, what luxury items that, are a must have for them. And we tend to prioritize based on their budget.
Okay. And just out of interest, for people who are sole traders or self-employed, how different is the conversation then?
It's an educational piece for self-employed because they don't get any sick pay and they don't get statutory sick pay from the government either. So they need it more than anybody else. Do you see what I mean? And it's letting them understand that these things can happen to them and their business, not only their business would go under, but also the finances of the house. Do you see what I mean? So without depressing people, they need to understand that it is available to them to actually make sure that their income is still coming in, regardless of whether they can work or not work.
Do you see a lot of self-employed people taking it out?
Not as much as they should.
There's a
That's what I
gap.
mean. Yeah, and I think the gap is because they aren't naturally going on to compare the market and money supermarket. And unless they're buying a house, they're not coming into contact with people like myself who would speak to them about it. Do you see what I mean?
So presumably freelancers would be in the same boat as well.
Yes. Yes.
Where it's more critical for them, but they're less likely to have it.
It's about the touch points and how aware they are of what's available to them. Do you see what I mean? So it's very much an educational piece.
This episode of the Investing Insiders podcast is sponsored by Saxo Markets. Saxo provides access to a broad range of global assets through a sophisticated trading platform. You can trade US stocks from as little as $1 per trade and UK stocks from $3 per trade. Please remember that all investing involves risk. The value of your investments can go down as well as up, and you could get back less than you invest. Terms and conditions apply. Visit Saxo Markets to learn more.
If you have it in place, does it cover your entire salary, or how does it actually? What are the mechanics?
It's normally 2/3 of your salary because the insurer doesn't want to make it more attractive to be off work than in work. Do you see what I mean? So they're covering you for 60 or 65% of your wages, and it's a tax-free monthly income. The real thing that you need to be aware of also is that there's normally a waiting period. So you can choose to wait 4 weeks, 8 weeks, 13 weeks, 26 weeks before this policy pays out. But for most people, waiting 13 weeks without a paycheck is too long. So, but the price is more attractive the longer you can wait before they start paying you out.
That makes sense. With policies as well, it'll be interesting to know. So the idea of a portfolio career where people kind of move around different jobs is becoming, more common. Does one policy see you throughout your career, or do you have to keep changing and updating? How does it work in that respect?
Yeah, so it would be a good idea to actually review your policies as things change. So as you have children, as you move home, as you change jobs, you would check in with your financial advisor and make sure that that policy is still relevant and it's still going to help you meet your goals. So in that respect, it is good to review, but you can hold a policy between now and the age of 68 and not change it as long as it's been agreed on this picture of health. Because if you wait another 10, 15 years, your health could change. You could have high blood pressure, diabetes, things that would actually stop you getting one of these policies because they're quite hard to get if you've already got ongoing.
The sooner the better is the message here, I think.
Yes.
Yeah.
With all insurance, you get it before you need it, isn't it?
It's too late after, isn't it?
Yeah. Yeah, I often say to my clients, you wouldn't drive from here to Exeter without your seatbelt on. That's the same, if you're going for a mortgage, you need to buckle up. You don't know what's around the corner.
Yeah, no, I can see that. So, at one point you mentioned 2% of your salary. Is that sort of a ballpark figure? Is that an indication for people? Yeah. Obviously, there are going to be factors that make that vary, like your age and your health and things like that. But okay, so if someone was considering it and they just wanted to, before they even spoke to an income protection specialist, they could just sort of
work out their annual salary and take 2 or 3%, and then realize that is going to guarantee them an income between now and the next 20 years.
Okay, and if they worked that out and sat back and went, I can't afford that. I don't have 2% spare at this point because every penny is gone. What sort of a compromise? Are there any compromises that people like that could?
Definitely. We will insure them for the amount that they can afford. So if they just want to cover their monthly rent or, their mortgage, it's £1,500 or £1,000 is guaranteed to be paid by the insurer. Do you see what I mean? So you don't have to cover your whole, the maximum that they'll allow.
It's interesting to hear that there is that flexibility. I think sometimes when people think about protection and insurance, it's like it's very fixed and, there are certain boxes that you have to fit in. But it sounds like through talking to somebody, they can help you find that balance.
Yes, definitely. It's better to have some insurance than none whatsoever. So, even with critical illness, like I said, I will cover people for, a year's worth of salary rather than trying to cover a 250,000 mortgage on a critical illness policy.
And say if someone was to take out the income protection and they had it in place for, say, 20 years, over the course of that 20 years, their circumstances can change quite a bit in terms of their income and their mortgage and everything like that. So how often do you sort of say that people should review the whole policy?
As things change, they're free to reach out to me and we can always review it. But as a rule, every 4 years, I would say you would, yeah. But if something happened, sooner, you could separate from your husband or get married or have children, as things happen, you want to review it. Things like critical illness include the children on the policy. So it's a good idea to refresh.
Okay. And if someone was to come to you and go, okay, listen, I'm going to take the money that I would have spent on the income protection, and I'm going to invest that money instead and grow wealth. And then if something happens, I've got that as my buffer. What would you say to them?
So savings can run out very quickly, whereas an income protection plan could be paying you out for 10, 15, 20 years. So when you work it out financially, what it would be paying you, often it's over £1 million that the insurers backed you for. Do you see what I mean? It would take a lifetime to save that sort of money and you can't guarantee it. And if you get ill, you ain't going to have the capacity or the earning capability to be able to build your dreams. Do you see what I mean? So it's like a Jenga block. If you pull away the income, everything else falls over. All those plans that you're making, they don't happen.
Yeah. What percentage of people in the UK have got income protection at the moment?
So at the moment, it fluctuates between 10 and 15%. So a recent report, an industry report through Cover magazine, they said 14% is what it was for 2024. So they're always monitoring it, but the actual uptake has increased quite significantly because people are becoming more aware of the importance of protecting their income. So it's outgrowing life cover and critical illness as far as people demand for it, and the frequency of claims is a lot higher as well.
That number surprises me, to be honest, because historically households were more likely to have one breadwinner. And my assumption, wrongly, was that as we've changed in society and households I don't think many households can survive these days with only one breadwinner. That the second salary is the sort of, it gives you that little buffer if one of you becomes ill. Whereas previously with one breadwinner, if that breadwinner became ill, there was literally nothing for the household to survive on. What do you think's driving the awareness and increasing the amount of people that are taking it out?
People are more health conscious since the pandemic, and a lot of people went down with mental health issues as well. So that took people out of work. So I think the level of awareness is talked about a lot on the news as well. And you've got Martin Lewis there as well. So I think the profile of insurances has really stepped up, and there's a bit of focus now on inheritance tax and pensions and things like that. But, you can't plan ahead if you aren't generating an income. So it needs to be underpinned by some sort of insurance,
That's really interesting. I think with the growing awareness, are you seeing more competition in the market? Like, are people starting to offer more flexible policies, more competitive pricing? How has that kind of affected the industry side of things?
Yeah, so the insurers are innovating. So we've got more health and well-being initiatives being introduced by the insurers as well, because it's a win-win. If you're more active and you're more proactive in managing your health, you're less likely to get these horrible illnesses that you're claiming for. Do you see what I mean? So the insurer will give you discounts off gym membership or give you a program to incentivize you to give up smoking, or, be more proactive, really.
Yeah, no, that's really good to hear. And it's nice to see when an industry keeps evolving and kind of meeting the needs of everybody that's there. Are there any gaps that you kind of see in the market still? How do you kind of see it evolving as things keep progressing?
Yeah, so same old inclusion gaps. So there's more take up of insurances by men than women. So women tend to be left behind when it comes to protection. Also, young families, business owners, like we've mentioned today, manual workers, your plumber and your electrician aren't necessarily pulling off our hands to get this insurance when they actually need it. So, yeah, I would say small businesses, I would say women, predominantly Black women as well. Scottish Widows have done quite a lot in the area of diversity, and they came to the Black Girl Finance Festival and spoke about protection, because that's a demographic that, it's my community, but we're not always educated in the financial services the way that we should. We sometimes get left behind in that respect. So, the normal inclusion, where every area of life that you look at, and the wealthy tend to know about insurance. They tend to take it out without much persuasion, whereas, the working class don't tend to actually know about it. Do you know?
Well, I suppose the wealthy are more likely to have engaged with financial advice.
Exactly.
And yeah, so financial advisors presumably will recommend this to anybody who has a mortgage or a family or financial.
Yeah, so people slip through the gaps is what we're trying to say here.
Yeah, I think, building that awareness is so important. And I guess we'll hopefully keep seeing a gradual uptake of these policies as time goes on, because they are really important, especially with, more pressures on income, cost of living, and just people trying to hold things together. I really liked what you said earlier on about trying to create some kind of stability for the future. For people that might be looking to take that first step and, get over the overwhelm of trying to find a policy, what would you kind of suggest that they do to take that first step and try and find something that might help them?
The first step would be to work out their income and outgoings, work out their budget, and then speak to an advisor. Just either go online or go into their local bank, or, wherever they can actually speak to somebody who has financial qualifications, basically, to be able to give them a bit of advice. They don't have to buy anything there on the spot. It just gives them more options and more choices.
At what age do you see people tend to take this out?
I have seen a report which says 25 to 35-year-olds are now more likely to be taking it than the older age groups. And I think it's the social media. People are becoming more aware.
Yeah, there is a lot of that. I say finance and social media. People are learning a lot more. And I know that there's a lot of criticism about finance and social media, but at the end of the day, it meets people where they are rather than trying to talk to people in sort of financial jargon. And if it's having effects like that, then that's great. I mean, that age group surprises me, but I suppose within that range, people are just starting to start a family, and that changes your mindset massively, because you're suddenly not just worrying about yourself, and you have to sort of think about, what would happen. I mean, I suppose before you start your own family, your mindset might be a little bit like, oh God, if something happened, I just move back in with mum and dad. But that doesn't always work out when you've got husbands and children, or whatever. So
yeah. You've raised a good point there, though, Antonia. People don't tend to come to you straight for income protection. People tend to come to you for life cover. What's going to happen to my family if I'm not here? And then by having that life cover conversation with someone, then we say, well, actually, yes, it would be catastrophic if you passed away, but also you need to consider the fact that you're more likely to be off work sick for a couple of months than you are to pass away. So that also needs looking at.
Yeah. So if someone is listening and they had, I'm just going to take a random example here. They had a mental health disorder and they thought, oh gosh, I've already been diagnosed with a mental health disorder. Is income protection for me? What would you say?
Depends on the severity, you know.
Really? Okay.
Yeah.
It could be that it's just totally unaffordable.
Well, sometimes the insurer will actually exclude that for a period of time until you've been symptom free. You know, if it's a pre-existing condition, because they tend to only cover you for things that are going to happen in the future. That's how insurance normally works. It's covering you for, yeah. Okay. So, but with mental health, there's different degrees. You know, it depends on who's had to be involved. If you've been under a community support team, if you've been under a psychologist, you know, what sort of medication you're on.
Yes. I mean, I suppose because we seem to be in a mental health pandemic at the moment. So I suppose that changes things with underwriters for policies like this. But I imagine that that's the group of people who would be really looking for this kind of cover.
Yeah. And on a positive note, if people have had medication and they manage their symptoms and now it has no impact on their day-to-day life, that is also taken into account as well.
Okay.
So
that's really promising and quite good to know. Yeah,
definitely.
That's not your biggest group of people taking it out anyway, is it? You mentioned cancer was the number one reason.
So cancer is the highest reason for claim for a critical illness in this country. You know, heart attack, cancer, stroke tends to be the high ballers, as it were, when it comes to illness. I know it's a grim topic, isn't it?
I know, but we all have to face this, that, you know.
Yeah.
Getting the conversation off the ground, you know, lets you take more control. Yeah.
But for income protection, it tends to be backache and, you know, anxiety and stress that keeps people off work, long-term sick.
Now it's time to dig into one of your listener letters. If you've got a money question, send it in to podcast@investinginsiders.co.uk and we might read it out on a future show. So today we have a question from Chris, and Chris asks, there have been a lot of layoffs at my company recently and I'm worried about redundancy. I currently rent, but is income protection something that could help me if my role gets cut?
Yeah, so unfortunately, income protection is not looking at redundancies. I think before the pandemic, a lot of the insurers did actually offer some form of redundancy cover, especially for people that had mortgages. They would pay their mortgage for 12 months if they, you know, were made redundant, but they don't tend to offer that now. So it could be some independent companies would make you pay top dollar to have that type of policy, but they're not widely spoken about since the pandemic. I think a lot of insurers have said, no, we're not doing redundancy cover, but it's more focusing on, as a renter, you know, are you well enough to go to work? If you're not, then we'll help you with your income.
Amazing. Yeah, that's really interesting to hear. I know you mentioned that there were just a handful of policies that might look at redundancy cover. Is that something people could find online, or what's the best way for them to kind of look into that if they were hoping to try and get covered for it?
I think there's websites like unbiased.co.uk, which is like an independent online advisor that would point you in the right direction. It's not my area of expertise. I only look at your personal insurance, like life cover, critical illness, income protection. That tends to be my forte.
Amazing. Well, thank you so much for that. Chris, we really hope that helped. And remember, if you do have a money question, send it into podcast@investinginsiders.co.uk. Michelle, thank you so much for joining us. It was a pleasure talking to you. And just digging more into income protection. There's so much to sort of learn and spread awareness about.
What I didn't mention as well, what I do love about income protection, it's there in the background. You can draw on it as many times as you need it once it's been agreed between now and the age of 68. And also it can be index linked. And what that means is, say like you covered yourself for £1,000 a month. What that £1,000 can buy today and what you can buy in 10, 15, 20 years is two different things. So by having it index linked, it will track and they'll pay out the higher amount, what that money's worth. So the money holds its buying power. So that's something I really love about income protection that you may not know about unless you have advice.
Amazing. Well, thank you so much. Thank you so much for joining our Investing Insiders podcast. If you liked the episode, please subscribe and leave us a 5-star review on your platform of choice. For the latest money news and deals, you can sign up to our weekly newsletter at investinginsiders.co.uk/newsletter-page. We've also got a suite of guides, tools, and calculators on our website at investinginsiders.co.uk. You can also keep up to date with us on TikTok, Instagram, and YouTube. Thanks for joining us, and we'll catch you in the next episode.